everybody. This is Owen McCafferty, and with me is Dr. David Tack. And we're continuing our discussion of the professional fusion partnerships. We were tackling the lovely world of the synergies of income, cost, and expense. In prior videos, we had talked about the synergy of income and the synergy of cost as it relates to professional fusion. Now, let's delve into the rather fascinating and infinitely variable topic of expense synergy as it relates to practices that would be involved in a professional fusion partnership. So Dave, this is a long area. I won't know how many recordings we may make. We've made the pledge to you that we try to keep these narratives under 15 minutes so you have a time to think about what the issues are, to be succinct in the commentary, and then to allow you at your leisure to play an additional narrative or to go back and listen to one that occurred preceding. The whole purpose is to explain why a professional fusion partnership would be of best advantage in improving the earnings that you have from practice, joining together in a larger group as opposed to trying to go it alone. And I think your words, Dave, were a one-off practice.
So, yes, as a one-off practice, you have legal fees, you have accounting fees, you have human resources costs, you have insurances, you have payroll, and so in the entity I was involved with, going from a single practice to a larger group, it was eye-opening, the savings that we could have in accounting, legal, payroll services, insurances. All this was negotiated. All this was done under the umbrella of this organization for all the practices. And as a practice owner, it was so nice because I didn't have to fool with that anymore. I really didn't have to worry about it. It was all done. And Owen could go into detail a little bit more about the administrative costs because all I know is the bottom line was better for us. And it was as a result of our ability to have everything under one roof, providing all of that, all those services for all of our group.
So the synergy of expense can be classified and delineated into two major categories. One is the expense control and negotiation of best possible price. David talked about insurance. That was a major area where there was a contribution as a result of a large number of dollars that were then brought to one major insurance broker. Then there's the expense control through synergy that's involved through the Socratic exchange. That is having discussions either formally twice a year at our joint meetings where a variety of topics were discussed, or alternative to that, the magic of picking up the phone, or the third element of the synergy of expense, and that would be the analytics of expense control. And Dave and I have committed that these are a lot of different topic areas. We will be dealing with them in multiple webcasts. But just to give you an overview, if you will, of expenses. As David said, administrative expenses are one of the elements. There's also collection cost expenses. There are facility costs. There are employee-based costs. There are costs that relate to miscellaneous items. And these all comprise what we would euphemistically make reference to as general and administrative expenses. Now, in a professional practice, the administrative costs would most easily be recognized, such as marketing and advertising costs, dues and licenses, the costs, as David indicated, for professional fees, such as for accountants, attorneys, consultants, costs that relate to miscellaneous items such as practice vehicle expenses. These are all administrative costs that are incurred. And where a group such as Professional Fusion's partnerships would be involved, the advertising cost and the marketing cost can be further delineated in terms of efficacy and efficiency. The efficacy is the effectiveness, the ability to be with 30 or 40 practices discussing what really works in terms of practices in geographic areas, in terms of manifestation of the availability of goods and services to the marketeers, which incidentally is the definition of marketing, and how professional marketing differs from the selling of trinkets, and what is involved in terms of marketing as it relates to specific practices. So the group of different practices can leverage among themselves. Excuse me. Then we also have the availability of negotiating better pricing with an advertising agency or a marketing group. And this is done in a couple of ways. First of all, direct outside marketing negotiation. And secondly, because of the services group that provides many of the administrative costs, there is the availability of leveraging to best possible benefit accounting, bookkeeping, legal, consulting costs, and providing those services over a wide variety of platforms to diminish costs significantly. There's also the costs that relate to those areas that are peculiar to a practice, such as licensing costs, continuing education costs that may be involved, dues and subscriptions. All of these things are then brought to bear, and that's just the administrative element. So the advantage in doing that can shave off a couple points of cost or make the practice much more efficacious in terms of the dollars that are being wasted in the exploratory activities of trying to be first kid on the block. The experience of knowing that it hasn't worked 38 times doesn't mean that the last two that comprise the 40 are going to have some magic involved and it will work. You know what Einstein said? If you continue to do the same thing over and over and expect a different result, it's a sure sign of lunacy. So the administrative cost, Dave, would be one part of it. Then there's the cost of collection. And for that area, it's a surprising area, but you can shave 0.2 to 0.5% off by negotiating in a large group for best possible pricing in terms of credit card discounts. Yeah. It is amazing as it relates to the costs of provision of service, both in terms of audit that could be done on a grand scale in terms of what the credit card originator is, what the credit card processor is, and what their relative willingness to negotiate for a lower price would be. I know everybody says that it's different because I've got a buddy at the bank and he tells me that I've got the best price. And there is swampland in Florida. I do own some of it. And unfortunately, it doesn't go up in value.
So Owen, you when you started saying collection expenses, my mind went to bad debt.
Yes.
And so is that something that can be negotiated for the group as a whole, so that you have practices in Nevada, Florida, Texas, Wyoming, wherever. So my mind went to collection, not the paying of the credit card fee, but really the collecting bad debt. And so that's a part of these administrative costs also.
Based on the specific type of professional practice that you're dealing with in Fusion, yes, that could be a significant part. But the issue is that our life is now being run by debit cards and credit cards. And where profits are being absconded is in the credit card discounts that the banks are charging. All of these affinity cards that everyone thinks they can either get cents off or miles or affinity-based benefits are costing you as the provider of the good or service significant amounts of money. By watching that ratio and in the utilization of how credit cards are a factor in practice, you could shave off 0.1% to even a full percent. Now that doesn't sound like much, but when you look at the money that would be going back to a practice, let's say a $3 million practice, that's $30,000 by 1%. That's a pretty significant amount of money. So we want to do things to make practices through professional fusion effective and efficient. And that would be an example of the collection costs. Let's now deal with an area that would follow through, and that is the cost of employment, the cost of compensation. Now that's a big area. And in terms of professional fusion, the advantages and the benefits would be derived in terms of employee benefits by negotiating programs that are both effective and efficient, and providing a meaningful series of medical insurance-based programs, disability insurance-based programs, life policy group programs that could be of best benefit to the individual practices. And the nice thing about it is once you join a larger group, you have much more leverage in that area. And the administration of those employee benefits then become very important. Now, the whole area of employee benefits could include pension, profit-sharing plans, could include medical insurance, could include group legal policies, could include de minimis fringe benefits. There's a whole series of things that we can get into on it, but in terms of compensatory portions, it's a major part. And trying to design and direct a meaningful program among 40 different practices becomes a far easier task than trying to go it alone. Compensatory payments as it relates to support staff in the specific profession that you may be are benchmarked within the group as a ratio of a percentage of gross income, as a ratio of transactions, as a ratio that exists in terms of serving the needs of the professional doctors within the entity, all have a bearing. And the synergies that are picked up could be as significant as 1% or 2%. Now, when you start to add these percentages together, I think you can see that we're looking at savings between costs and expenses of 5, maybe even 6 full percentage points. It's a significant
and we saw that once
we did.
Individual practice going to this other organization, and so it was pretty eye-opening. Again, on $1 million, that's $60,000. So it's a significant amount of money, and again, you're not providing less care. You're just leveraging the ability of having this many people working together to get this best pricing.
It becomes an issue of head count. And the more heads that you can count, the better the opportunity you can negotiate. We were lucky because our vice president of operations was a wizard at some of these things, and she really did contribute quite a bit. So let's go to the lovely world of facility costs. Now, these are true expenses, but we call them costs because there are some things that are variable and some things that are fixed. You can't do too much with fixed expenses. Excuse me. Rent can be negotiated. Clauses and terminology within the rent agreement can then be redirected and based on an enlightened legal group that understands issues. But the lovely world of property and casualty insurance has been a major benefit in a group such as a professional fusion partnership. Because in the property and casualty insurance comes the coverage that relates to tangible personality, which would mean basically equipment, inventory, furniture, and fixtures, computers, and in the netherworld, software and other intangible assets. Property costs that relate to the insurance of the underlying building, if your lease agreement is on a triple net lease, which most of them are, And then finally, the liability section of coverage, which you may not necessarily think of it, but there are coverage protections that we have found many of the practices when they first started the group that we were in didn't have adequate coverage. And then finally, the issue of leveraging all of that for best benefit. Excuse me. But these are factors that all have a bearing. Dave, we're again getting close to our commitment.
Right.
Just like to say thank you very much.
No, thank you, Owen. That was very informative.
So we'll see you all again.